Hello, Matt.
Yeah,
Welcome
hi.
back to F.A.C.E.
Hi,
I,
thanks for having me. So I hit share here.
yeah.
And so let's move this little bar.
So, Matt, I'm trading a little better than I did in the last pandemic.
Okay.
I
What's that?
was,
What's that for you? 1968? No, just joking.
yeah, I mean,
You and
my
your
my first go around, yeah, when I was hanging out with Jesse Livermoore, we were just in high school and we weren't
there we
interested
go.
in stocks yet. But anyway,
Well,
welcome
it's
back, buddy.
good.
Lot to
Thanks.
talk about, huh?
Exactly. Yeah, and thanks for mentioning Livermore. We'll of course make our way to him as usual.
Yeah, I always look
uh,
forward to talking to you and everyone. You could follow Matt on Twitter at DJ Thistle 01, right?
you betcha.
Okay.
Cool. Yeah, so let me just grab my notes here. And yeah, so as I was preparing for the last show, or for this show, I was taking a listen at our last one and kind of realized that over the, I don't know, year and a bit that you've had me on regularly, I've been kind of telling the same kind of story. And that this story has to do with cycles. Solar cycles was one thing we were talking about from this sort of GAN cycle side of things, and then just a typical recession from just the credit cycle, and also if we were to look at the long-term versions of the
Since you brought
Dow.
up GAN, someone sent me a GAN wheel chart that shows something huge happening in late May that has something to do with some type of square from 1929.
Interesting. Yeah, because of more of a crypto person, I've
Okay.
not taken advantage, done the GAN squares and wheels and all that kind of stuff as much as I personally just focus on like the cyclical action within a
Yeah.
sector, cycles within cycles, because time, there's definitely elements of time, but
Well,
yeah,
the guy actually sells a wheel. I didn't buy one because I
yeah.
asked him. I said, if I have a flat on the I-10, can I use the GAN wheel for a spare? And it doesn't seem to work that way. So I
Probably not.
passed.
Probably
I
not.
passed on it. So okay, I'm gonna stop jabbering.
Okay, okay,
And
okay.
why don't you tell us? Go ahead. I'm gonna be a listener now.
Sure. So uh, in the last interview, things in the economy were starting to roll over, and like my general market belief is that markets are fairly correlated, and that's because of risk and liquidity. And I use a little bit of astrology for my cycles timing, and then general TA to make those cycles and projections kind of fit within typical, technical analysis market cycles and market structures. And a lot of what I've been looking for the past year is some type of what I call a 1987 style event. And what I mean by that is not that it's definitely like one big large crash in one day or a couple days and things kind of recover, but systemic risk that is a lot of panic, and that structurally on the chart we will see things staircase up, a big waterfall down, and then things slowly recover. Now, what I was talking about in the last interview was that we've seen what the coronavirus was doing in other countries, and I was saying that, okay, it seems like our plan in North America is to just sort of mitigate spread as much as possible. It's not stopping it. And through that, we have definitely seen a huge, staircase up over the last couple of years, and then this huge waterfall down. And also what was in the last interview is me saying that I think, the Fed is just going to print a whole bunch of money and pump liquidity into the system to keep that panic at bay. And that pretty much has been what all they've been doing, right? Is just printing money. And I think I recorded a quick clip from the last episode, so it's easy to find. So this is
Yeah.
talking and then me answering, and then I'm just going to read.
Figures.
Yeah, and then I'll show you some charts.
Okay.
So we were talking about gold and silver.
Yeah, I don't think we could hear it on Zoom. You can hear it, but I don't think we can. Can you hear me, Matt? We can't.
Oh, yeah, there we go. Now I'm going to close that. So
yeah, I think it's Zoom. They don't allow you to play, or there's a special setting for that. Anyway,
so to recap what it was,
I attest to you talking about
it.
Yeah.
So what we were talking about here, and so the interview was on the 11th or the 12th, and what I was talking about was the systemic risk and the correlation of the risk once shit hits the fan, so to speak, and that is exactly what happened. Is that as the Dow or the markets rolled off, I said in my little spiel there that people may or may not have heard was that I would think that if the markets roll over in an event, the Bitcoin would, and it didn't. And I said gold would, and as you can see from the huge, cascade during the panic, gold did as well. And even Amazon, which is good now and at new highs, is also took a huge hit. You see gold, Bitcoin.
It's binary. Everything's binary, man. Everything's going up together and down together.
And all these three things also turned slightly ahead of the market. So what I was saying in that blurb was a 1987 style event. We were looking at that on solar cycles and flu cycles, and we have 11-year cycles on those, and those were matching up. And I even said, this was in the charts we're showing in January, I was saying a 1987 style event in 2020, and that is certainly what we've got. And then for people that maybe newer traders or whatever, what happens is as the market is rolling over and dumping and everyone is selling, things that might still be profitable for them, like Bitcoin or gold that they're in, sell off as well, because people need to make up for their losses in the general market. So even Amazon, where people might have been in profit, and because of the online ordering, still ends up doing better than the market, it's still sold down as well too, because when everything hits the fan, people need to take their good money to pay for their bad calls. So that's just something that, yes, people really need to understand, that there's really not much of a hedge in ultimate panic. So you kind of...
Even the bonds, Matt.
Yeah, you got to buy your hedge during the end of the panic, ironically enough, right?
Yeah. Even the bond suffered from 180 to 140 from the low. So, I mean, that was after the panic. But, where could you have hidden cash, right?
That's about it, right? And, not every single person is going to be able to fly into cash in and out, but just the point is, we have risk, and you have to understand the general macro environment. And that was something that, personally, as a trader, I was very happy with all this analysis, because it was a pretty detailed viewpoint of multiple sectors and how things are working together. And these are the wins that, sometimes as traders, we really take it in the chops every now and again. But when you have the moments where you have an overlying thesis of the macro picture, that when things start to hit, that means that you can go on with the rest of your plan. Because if the
what vehicle did you use to take advantage of the downside? I'm curious.
I was not as probably exposed as because I was seeing some of that risk come up in January, and then mentioned it, in March in our interview and whatnot. And I had been preparing even myself in February. I'd seen how things were going on in the world, and I had adjusted things a bit and was, pre-buying food and all those kind of things, so that the shutdowns that, or self-isolations that have happened, did pan out, and I was happy with that kind of thing, and I thought Bitcoin, because the halving would have a nice bounce anyway, would recover with the market. And also my own general thesis of it being a 1987 style event, I put a lot of chips on that. And assumed that we would get the type of bounce that we've got, and we have. So now it comes down to, are we going to have the proper kind of human ingenuity that, we're going to be focusing more on tech? Is tech going to be driving the markets to new all-time highs? I think that that's possible in the years to come, because
tech's almost there.
Yeah, exactly. So it could just pull the rest of the market higher, because, when you look at, Dow 30, right, it's the top 30 stocks. So if the top 30 stocks change, and those are, we're finding ways to be ingenuitive as humans, then that's going to push the market higher. So that was just something I wanted to recap, because that's something that we've been following for so many shows, and it's just like all panned out. So if this all keeps on panning out, then it could definitely, there's going to be some kind of pullbacks along the way. That even happened with the 87 style dump, like in actual 1987, and the recovery afterwards. So it's not just straight up, but
we never had a retest of the low in 87 though, did we?
No, and that's not looking like what's going to happen here either. I really truly think that unless we have a really strong second wave of the virus, I think it went down too far and people priced in too much risk, right? So as things change in the future and we do get a second wave, we should be more prepared for it. So, do we have to have that much panic and risk factored into the system for a second wave? I don't know. We'll see. So
do you think there will be? Any of your work point towards, the parallel to 1917 was second wave was, first wave, then armistice, and people went out and forgot about it, and then the second wave was the devastating one.
Yeah, exactly, and that's very noticeable in the charts. And what really made the difference was how people acted in the summer and late summer and going into September. I think there's a chart that shows the difference between, I want to say it was St. Louis and Philadelphia. And
I saw that.
One of the cities chose to have a parade for something that was going on, and one city didn't. And the death, the impact.
It was Armistice Day.
Is that what it was?
Yeah, celebrating the end of World War I.
Yeah, and very noticeable on the charts. So I think it's very important that people, no matter what their personal views are of what's going on, that at least we be mindful throughout the summer and not just try and go back to completely as normal, because it doesn't mean stay at home all the time, but it does just mean, when you're out and about, you keep that little bit of distance or whatever, and don't, if you've got a cough, don't go out kind of thing, because it's not like this crazy airborne tuberculosis kind of thing, right? But it is that if you're not paying attention and you're rubbing your face after you go out, just like anything, you're going to get germs on you. So
what about attending a spin the bottle party sometime in the summer?
Yeah, I guess.
You remember that?
Yeah,
you play that? Huh?
Of course. In junior high, right? Yeah.
Why not now? I'm in my second childhood.
There we go.
All right.
Yeah. Blast through a couple charts here. Natural gas. This is something that we've followed or probably mentioned each time I've been on here. I've been kind of looking at this as it's like a general global macro indicator as well too, and it hasn't done anything crazy outside of what was projected over the last few months, where these pops downward are each about 15%, and if that were to happen from this low down 15 again, that takes us to the old channel. This pattern in here and here is all congruent. So if price can get down to the bottom of the channel again, and then it would be a strong buy. I think so the reason timing wise for people listening is that natural gas, heating demand in the wintertime, would drive price more than people just having barbecues in the summer. And so, a push down here into the summertime with low demand and then a bounce back up, and that, we're talking multiple years to get back up here again. But if we did have a push down and then just, up here over the winter, pull back next winter, that kind of thing, that could become very strong, long-term profitable trade for people. If it were to go kind of sideways, what I think that would show is that, deep money, big players in the market would be putting strength in, like putting a base in so that it can pop up. Let's move on.
And big resistance at $2. Okay.
Yeah, exactly. Yeah. We usually end up talking about gold or something.
Yeah.
So we've had a huge, just, I don't know, U-shaped up, the cup of a cup and handle if it were to ever happen. And the reason that I mentioned cup and handle is that last time I pointed out gold and Canadian dollars, same sort of shape. This in here reminds me a lot of what's happening here. If now we're going here, 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 here in an A, B, C, D type fashion. I think
Are we completing?
Yeah, and I think it completed right about here on the CAD side. So
yeah,
it could be cup and handle and up again, which could happen here too if we were to see, you know, here's our trade worries, and here's the getting sorted out. And then, you know, not all sorted out, but a lot of trade deals being done. This was like soybean and all that other stuff, the deals they actually did. And then we had a little pop up here for Iran, and it seemed like it was going to roll over. But then the coronavirus, boom, 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 here we are. So if we don't get a really bad second wave, and we still have these Chinese trade deals from before holding, you know, that would definitely seem like that this chart could then put in some of this sideways action. Maybe Trump wins again, and it seems like the market, even if it's Biden, it's like the market likes both of those options compared to a Warren or a Sanders. So that could create, you know, stability, and then boom, at the next election cycle, it could just take off. Or worst case scenario, you know, there is a bad second wave of coronavirus, and you know, all bets are off.
Let me ask you this: if their second wave should be in full gear around the elections, what do you think is going to happen?
Yeah,
are we going to have elections?
That's a tough one, right?
Is it going to be called fixed or rigged or
I think hoax? I think no matter what, it gets called fixed or rigged from either side, because if the second wave doesn't show its face till, you know, very close to the election, then you can't really even do paper ballots, or you'd have to postpone it. And I don't think if America's, you know, postponed an election, that would be a big deal. So and then vice versa, you go the other way and you know, you hold it. Or even right now, Trump was upset with mail-in ballots for the special election in California 25 last week, because, you know, a month ago he was saying, oh, you know, it's rigged, it's fixed, you can't have paper ballots. So I think no matter who loses, we'll just say that the election was fixed. Take a look at Bitcoin. We had it, this is on the hourly, run up and then break down into the global panic. So how I do my easy levels is I just take a look, what is retail looking at? They usually draw simple lines. Those create our raid levels. As the panic happened, our first kind of stopping spot was here. Next, it came across there to that level. At the halving date, we finally hit our final raid target. It rolled over, and that's clean break here. Huge volume after the halving sell-off. It came right back up to this area, which is, you know, congruent to all these kind of raids. So that top also was the top here. We only spent a couple hours over top of that resistance after coming back to sweep all people's stop losses. And then yesterday's sell-off happened at pretty much the exact same level. And the price has come down to here last night. So I think that 9,800 is really the resistance people need to be looking at, more than the solid 10K moving forward. You know, people like to, I generally don't like to speculate on target prices, but, you know, you got to do every now and again. We've seen a huge run up on the first bubble of Bitcoin. We're talking like 50,000%. Here's 10,000. So we're looking at that as about 20%. Okay. So we got 10,000 here, and we got this. How I'm figuring these out is the top, the bottom, and then these circles here, here, and here are when Bitcoin halvings took place. So we had a speculative bubble, a pop, a a bounce into halving, and in each 3 cases, this bounce was above this special red line that I have on my charts. So it's consolidating in what would be a bullish zone, which is good, and that from bottom to top here, 50,000, and then these here, here, and here, I'm starting my percent pull-ups at where halving took place. And each time it's diminishing returns, because as things get more speculative and more public, the percentage rise is going to be slower, as just more people are in the market. So if we were to take that same sort of diminishing return, we're still coming up somewhere near 60 to 70,000. So if people want some hopium to latch onto for Bitcoin, there's one way to take a look at the big picture.
Scott Henderson says, nice perspective on the back test relationship to halving.
Awesome, thank you. I think all of these charts we covered in my.
And someone was asking, what was the chart before the Bitcoin? Was that natural gas or that was gold? You went to gold.
That was gold. We were talking about the CAD USD or gold in US dollars, and then comparing it to gold in Canadian dollars.
Would you be putting fresh money into gold here?
At this, I would. I would be looking for a pullback, or where are we here? Or a break, like above 1800, and then like the first retrace. Here I'd be wanting to see a significant pullback, just because we're so close to the ceiling. Yeah. Whenever we're really close to a bottom or really close to a top, I don't like to make a move until it just breaks one of those ways. Because what's the point of 5% that you might be losing on either side of a trade versus just getting that solid confirmation.
Okay.
And I think we're almost out of time, but I did want to, where did I put it? There it is. So Livermoore.
Question, do you have a view on silver before you get to Livermoore?
Okay, so silver tends to always be like a lagger of gold in both directions. So
until recently.
Yeah. Well, yeah, and then it does all its catching up.
If you don't have a view,
I mean, I think my general view on silver right now is that I think gold is doing this. That's my view on gold. So if I think that this is going to kind of go sideways for a bit in here, and I would want to wait for gold to pull back to then to hit up silver. That's
what would make you bearish gold? Would it have to go all the way back down and negate that breakout on that horizontal line?
For me to get bearish on gold?
No, the previous chart back on, would it have to go under 1360 there?
Okay, this is on the Canadian one.
Well, they both had a break. Okay, that was 1760 in Canada.
In here,
and
it
was about 1360 in U.S. So if we fell to 17...
Oh, I see what you're saying here, yeah.
Yeah, that's a breakout. If we ever took out that breakout, would that change the picture in gold and tell you that we have, really a big liquidity crisis happening?
Yeah, for sure. I mean, if we saw a breakout above and then it come back and back test it, and then the next couple daily candles, base, then that's definitely a sign of something huge happening in the market. Yeah.
Okay. All right. I'm pretty bearish up here.
Yeah.
Anyway.
Okay. Yeah. No, and I get it, because we're right at the ceiling, right at resistance.
Yeah.
Yeah. Of
course.
Right.
So you have a Livermoore chart?
Yeah. Very quick.
Okay.
Sure, yeah. So, a lot of people talk about Jesse Livermoore because he made and lost so much money, and he really is a great. I'm writing an ebook on him and trying to turn a lot of his quotes into actual charts, because that's the thing about Livermoore is he was a tape reader, and he was a pioneer in his day, and he didn't leave behind like a treasure trove of charts. You know what I mean? And it's a lot of
who else is a big Livermoore fan? You ought to have a discussion with Don Mead. You know Don?
Okay. No, I'm going to write that down, though.
Don Mead at 7 Sentinels. He's another Livermoore guy.
Okay, awesome.
And he's a lot older than you, so he's
From
had more time to study him. So
yeah.
anyway, okay, go ahead.
Yeah, so you know, made and lost a fortune multiple times because you know, he just didn't book the profits and hold on to them, and lifestyle and all those kind of things. So this is probably the most famous of Livermoore action, was the just this disgusting amount of money he made in this crash. Now, here's the thing: he lost his almost all of his fortune that he made there by going long here and it dumping on him, going short here and it rising, and then going long again here and it breaking down. Whereas if he himself would have followed his own rules, so that there's two basic rules. There's the Livermoore chart that everyone sees, that's a speculative chart, speculative bubble. And then there is like here and here. What he was a breakout trader. He wanted to see a strong macro environment. So, you know, globally things are going good. In America, things are going good and the market is trending up. And if the market is trending up, he wants to look at the strongest sectors. And then within the strongest sectors, he wants to look at the strongest markets. He doesn't want to look at laggers because they're lagging for a reason, was his thing. So when everything in the macro is on your side and everything is pushing, 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 he would be buying breakouts or shorting, you know, new lows. So
yeah,
here,
he's adding on the way up.
Exactly.
And,
so we're going to look at
yeah.
Yeah. So a couple of, you know, ways to see that. We'll use like a couple ways to see that in our times is, you know, gold here. We had, you know, resistance and a breakout. He takes more position, you know, more that backfills, but it holds. Resistance, breakout, backfills a bit and on the way up. A little bit of a resistance, breakout, backfills a bit on the way up. And he just keeps on adding and adding and adding. And then when things starts to break down or go too so much sideways, he's also looking at volume. And then, you know, he's either probably exiting here, or on these on a breakdown here. Back in, because he was all about panic, he made lots of money in the panic on the way down too. You know, if we were to look at our
but he was early bottom picking, and then he was just so out of rhythm after that.
Yeah, and then if we look, see if we see one of our last crisis, 07 through 09, you know, we had a breakdown to this low, which is equal to here, a little bounce off it, and as it comes back, this breakdown, which he would have short, that would be what he calls a pivotal point. It would have been happening here, 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 and probably some chop up here, but he still would have got in another position. So this is things that people can see, and then this is an example of this actual parabola chart. He did not like sideways, even though Wyckoff, you know, we know from our Wyckoff models that sideways can be good. He didn't want to touch that. He wanted to see the strong macro and then a breakout, you know. So we have the sideways, we have a breakout, he takes a position, it backfills. And then we actually have the cylinder, and then the breakout here, right? Cylinder, a breakout, back test, and go. So I think that these are just, you know, for people that want to dabble in crypto, especially altcoins. I talk about Livermoore a lot because altcoins are very parabolic and quick. You can be playing those on like the 4-hour chart, or if people are more long-term investors, you know, this is the whole, my, you know, trading didn't make me my money. It was my sitting and waiting that kind of did quote, right? So those are just ways that, you know, people can get really lost in the, and just in the chaos sometimes, right? But when you just sit back and take a simple view of, if things are moving up, I'm going to go with it. If things are moving down, then go with it. But if things are just going sideways and chopping up and all whatever, then you don't have to trade every day, and keep that money for yourself. You have to make back your losses. So don't be going off all happy shooter every day just because you got to get a trade in and use the trend, you know. So
make yourself rich, not your broker.
Exactly.
All right. So anyway, you did it again, Matt. Another great interview.
Oh, thank you.
Yeah, enough pearls to string a necklace, and appreciate you being here again, my trading warrior brother. How do our viewers keep in touch with you?
Yeah, so you can go to my Twitter page, which is DJ Thistle01, or coinstreetnews.com. The blog is active. We do mostly focus on cryptocurrency trading. because of the volatility, and bag your profits faster. But I do also cover some commodities, natural gas, and I like to, even though I don't post a lot of stocks, we do follow the general global macro picture because, again, due to Jesse here, Bitcoin is still part of the global macro picture.
Okay, well, Matt, I hope that you remain untouched and all the people you care about untouched by this COVID, and that really was great having you. Let's get in touch after the interview and get you scheduled for August and see what's happening there with natural gas.
Ghost month, perfect. Okay.
Huh? Okay. Oh yeah, that's right. Yeah, I learned that from you.
Yeah.
Ghost month. So I'll be wearing a sheet, and I'll turn on the webcam for that interview, buddy. So everyone, you're getting great, really great. Thanks. Nice show. Thank you,
everybody. Okay, awesome. Have a great day.
Everyone, my trading warrior brother, Matt Thistle. Have a good day, everyone, and we'll see you wrap it up on TGIF. Don't just count your Bitcoins, your halves, your gold coins. Count your blessings, and we'll see everyone tomorrow. Adios.